Assalamualaikum and hi everyone. How are you today? Hope you are fine and good. Today I would like to teach you Chapter 11 Relevant Cause for Decision Making, Part 1, Week 17. At the end of this lesson, you should know first, concept and characteristic of relevant cause. Number 2, types of relevant cause and irrelevant cause. Concept of relevant cause. Relevant cause is a cause that will affect any decision to be made. A relevant cause is a cause or benefit that differs between alternatives. Decision making is to choose the best alternative among many alternatives. Characteristic of relevant cause. Costs that will be incurred in the future. Historical costs are sunk costs which has no relevancy in the decision making. The cost must differ between alternatives. If a cost is the same whether we choose alternative A or B, then this is an irrelevant cost. A good example is factory rental, which remains the same irrespective of management wanting to manufacture product A or B. Only cash flow item and incremental fixed costs are relevant. Non-cash items like depreciation and absorbed fixed overhead are not relevant costs as they do not involve any additional cash flow. Types of relevant costs and irrelevant costs. Under relevant costs, there are opportunity costs, incremental costs, differential costs, and avoidable costs. Under irrelevant costs, sunk costs, and unavoidable costs. Opportunity costs. The potential benefit that may be obtained from following an alternative course of action. The loss of other alternatives when one alternative is chosen. Look at illustration for opportunity cost. Assume that through buying the telephones, Barron's company can use the released productive capacity to generate additional income of 38,000 from producing a different product. This lost income is an additional cost of continuing to make the telephone in the make or buy decision. Total annual cost under making the telephone 225,000. Opportunity cost 38,000, and then the total cost is 263,000. Under buying the telephone, total annual cost 250,000, opportunity cost 0, and then total cost 250,000. So we get the net income decrease 25,000. Under opportunity cost, net income increase 38,000, and then the total cost 13,000. So parent company should buying the telephone because the total cost is decreased under buying. Incremental cost. The increase in total cost resulting from an increase in production or other activity. The incremental cost is also referred to as the differential cost. The relevant cost for making a short-run decision between two alternatives. Example: for instance, if a company's total costs increase from 320,000 to 360,000 as the result of increase its machine hours from 8,000 to 10,000, the incremental cost of the 2,000 machine hours is Rm 40,000. Differential cost. The difference between the cost of two alternative decisions or of a change in output levels. Used when there are multiple possible options to pursue and a choice must be made to select one option and drop the others. Example: if a company has a decision to run a fully automated operation that produces 100,000 gadgets per year at a cost of 1,200,000, or of using direct labor to manually produce the same number of gadgets for 1,400,000, then the differential cost between the two alternatives is Rm 200,000. Number 4. Avoidable cost. The cost that is not incurred if the activity is not performed. These costs are often identified as variable costs, which vary based on production. For example, direct labor costs or materials. Under irrelevant costs is sunk cost. A sunk cost or stranded cost is an expense that has already occurred and can't be changed or avoided. The cost has already been paid and can't be refunded or reduced. It's in the past and has no bearing on any future decision-making processes. Example: cost of old machine. Unavoidable cost. The cost that is still incurred even if the activity is not performed. These costs are often considered fixed costs. Example: depreciation on equipment, property tax, lease payments, interest expense, and etc. Next, please answer this question. Number 1. What is a relevant cost? Number 2. State 4 types of relevant costs. Number 3. Explain sunk costs. That's all for today. See you next.